Hello, my name is Alon Brav, and today I'd like to talk with you about my research on hedge fund activism, research that I've been conducting over the last 8 to 9 years. Hedge fund activism, as the name suggests, is engagements by hedge funds that tend to purchase a minority block in the equity of target firms in an attempt to bring about change in those corporations. The hedge fund activism that we observe currently in the US, also overseas, is something that has been growing over the last 10 to 15 years, whereas in the mid-90s and early 2000, mostly small to mid-cap firms were targeted by hedge fund activists. We now have seen that no company is immune from the engagement by hedge funds like Apple, Microsoft, Time Warner, P&G, and of course JCPenney and others. And the research that I'll describe today and later on in August during our faculty conversations, I will try to describe what we've done and the various facets of activism that we've researched. And so hedge fund activism is a form of governance, and there are many other forms of governance: board of directors, executive compensation. All of these and other are forms where one tries to resolve some of the conflicts between management and outside shareholders. Hedge fund activists tend to do so by purchasing a stake in the equity of the target firms, typically on the order of 5 to 10%, and then engage with management. What we've done over the last 8 to 9 years is collect data on these engagements. We're US-centric, so the research that I'll describe today will pertain to those engagements. And that data set allows us to say a lot about trends, both in terms of number of firms that are targeted, number of hedge funds, tactics used by activist investors. Do you typically begin with a more amicable engagement? When is it that we see more hostile engagement with target firms? Then also we'll be able to talk about the type of demands that activists engage with firms. So we see demands have to do with capital structure, change your payout policy, stop that season equity offering, or changes that have to do with governance, de-stagger the board, remove a poison pill, fire the CEO, change the compensation. We see other demands that have to do more with business strategy, or engagements that typically have to do with capital reallocation, where the activists wants the firm to be sold, or perhaps just a division of the firm to be sold. And so the range of demands varies, and we have collected data on these demands and the price reactions that tend to occur once the activist comes up with those demands. And so one of the key questions that we can answer is, how does the market react to the arrival of the activist? Do shareholders believe that there will be value added once the activists have engaged with the firm? And as I'll show later in August, the answer is yes. We see price reactions on the order of 4 to 5%. These obviously vary by the very categories of demand that I've just described. We'll see what kind of engagements are associated with large price movements, and whereas what kind of engagements typically don't elicit a reaction by the market. One interesting result that we observe, and again very robust, is that these price reactions are permanent. That is, prices typically move up on average when activists arrive, and there's no evidence that prices then plummet back down within the next few months. In fact, we don't even see prices plummet after the activists leave the target firm. I'll be able to talk about the length of time from the arrival of the activists until they've left the target company, and address sort of the concern that has been raised by some regulators, some practitioners, to the fact that activists are seeking a short-term gain. And so they're there for a month or two and then they tend to leave the target company. We'll see that that's simply actually not true. Of course, there's a lot of heterogeneity in the length of time that activism takes place, the length of time that is needed to bring about change. But we'll see that the typical campaign lasts for, say, a year and a half, but some of them even go longer, up to 3 to 4 years. What I'll do then, after describing these price reactions, we will then ask, well, do we see more fundamental change at these firms? So whereas prices do move up, are they accompanied by change in the way these firms are run? We'll see evidence on profitability. Return on assets, for example, as a measure of profitability, tends to improve abnormally in the 3, 4, even 5 years after the arrival of the activists. We will look at other changes to these target firms and ask, for example, how does payer policy change? How does investment in innovation change? Once these activists come along, do they support innovation, or are they pushing these firms for short-term profits, sacrificing the long-term? And so if we'll have time, I'll present some evidence from more recent work that I've done where we gather data from the US Census Bureau in an attempt to ask not what happens at the overall firm level, but at the plant level. What happens to the factor productivity of these plants? How do they perform after the arrival of the activists? And so rather than the firm level, we'll more granularly at the plant level to see what happens to efficiency, what happens to efficiency at plants that have been sold. So to the extent that a plant has been sold by the target firms, how does the next management run those plants? Was it correct? Was it justified to push the firm to sell some of its non-core divisions? I look forward to receiving your questions and hopefully digging deeper into some of the other facets of activism that we've researched during a live session in August. Thank you.